Welcome, everybody. My name is Edward Givens. I'm a licensed health insurance advisor here in Arizona. Thanks for joining us. We're going to be talking a little bit today about health insurance and what you don't know might hurt you. I know I've got Don Schaefer on the line. Who else is on the line?
You can go ahead and click on the chat at the bottom of the screen. Oh, it looks like they're
on a phone.
They're on my phone. But you can go ahead and mute yourself. Let me see if I can unmute them. There we go.
Okay, can you hear me?
Yeah.
Yes.
Okay, this is actually Don Schaefer also. My computer, I don't have video or audio, so I needed to dial in so I could hear. So sorry, it's just me.
No worries.
No problem.
Hi, Don.
Yep. Hi.
All right.
We've got a small group here, so kind of as we go through and you've got questions, just let me know.
Great.
I just wanted to provide this as an opportunity to give people some information they might not be aware of and show them some opportunities that they might be able to take advantage of. Okay, I'm going to share my screen here and pull up the presentation and go through it. And again, at any time, Don, just feel free to ask me a question.
Right.
Okay.
And we are recording this, so I'll be sharing it with other people who were not able to attend live. So.
Yeah. Melanie, can you allow me to share my screen?
There we share screen. There we go.
Okay, got it. Here we go. Okay. So if you have to do this disclaimer, because there's going to be some information that does deal with taxes. I'm not a tax advisor. So the specifics, we'd have to work with your CPA and go into that in a little more detail.
Okay.
But Don, just so you know who I am, I have 15 years of healthcare industry experience. I'm licensed with all major insurance carriers here in the state, both group, individual health, life insurance, Medicare, and long-term care insurance. I'm active in my local church, Business Networking International, and I'm Dementia Care certified. Okay. So understanding healthcare and healthcare reform. As an independent business owner, small businesses, you need to always take into account the taxes and how that's going to affect your business as far as your healthcare goes, as well as what healthcare options you have, how to protect your income. As a small businesses, if you're not making an income, if you're hurt and you're out for 3 months or 4 months or longer, how is that protected? That should be a part of your healthcare plan. Okay. Show this to let you see that there are all kinds of companies out there that provide health insurance, Medicare insurance, small group insurance, supplemental insurance, life insurance. The thing is, each one of these and each different company, there's gaps. There's things that are missing. And a lot of times people quickly glance at what they've been given and don't get into some of the details, or maybe don't know the questions to ask. And having an advisor with you can help you find some of those gaps and fill them in so that when you need your insurance, it's not missing something that's important. And Don, one thing to remember, all of these companies, an advisor like myself and an independent advisor, you do not pay anything additional. It's already built into their plans. So whether you use someone or not, that commission is there. So you might as well take advantage of the free resource that's available to you.
Great.
Okay. I show this because a lot of people tend to be a little bit short-sighted with their healthcare because they think of their moment in time right now. You need to think of your healthcare as evolving through your life. Okay? You may be at the stage where you have kids that are just born, or they're graduating, or they're getting married. You need to think about how your healthcare is going to evolve to protect the health of your family, your income, and your family overall. I show this just to give you an example that these people at different stages have different priorities. Now, everybody's used to a good healthcare policy that's indispensable. But as a small business owner or an independent contractor, you've got to think about how are you going to cover it if you're not working. You're the engine that makes the money. And if you can't make money, how are you going to get that to pay for your health insurance, pay your mortgage, to pay for your kids' college? And then think about your family and their hopes and dreams. When I bring up life insurance, I also want people to think about not just the fact that there may be insurance there, but how is your family going to recover if something happens to you? We also tend to get short-sighted when we think just about ourselves and not about the effect of us not being there or us being disabled affects the rest of our family. I bring this up to let people understand what occurred with the Affordable Care Act. If you get an Affordable Care Act plan, either group style plan or an individual plan, there are no lifetime limits anymore. You're going to be covered whatever happens as long as you can pay for that plan. You can't be refused insurance or charged more because you have some sort of pre-existing condition. Your children up to age 26 can remain on a parent's policy. Preventative services must be covered and cannot have a cost share. This is one area, if you have an Affordable Care Act plan or a group plan, I recommend people utilize these. These are underutilized. They're free. You're not going to pay anything for them. So get your preventative services covered, because if you can be proactive and catch maybe a melanoma early, it's easier to take care of than if it becomes full-blown cancer later. And then many people are now eligible for a break in their health insurance costs through tax credits. And even individual self-employed individuals and small businesses can take advantage of tax advantages in their group plans or their individual plan. And we're going to talk about that a little bit later. The biggest thing for people to understand is that there must be some sort of qualifying event for you to get some sort of major medical. If you are a small business and you want to create a group plan for your company, whenever you create that group plan, that is a special enrollment period because it's a new job, basically. If you're having a baby, or if you are getting married, or if you're relocating from one county to another, that's another opportunity for you to be able to change plans and find the plan that works best for you. Here's the part that I want you guys to pay the most attention to. What does your plan cover? You know, if you are injured, how much is it going to cost you to go to the emergency room? How much is it going to cost you to pay for the ambulance? A lot of people kind of brush it off and say, oh, I can cover that. But accidents and injuries never happen when we plan for them. They happen at the least in time. Just make sure you have a plan to figure that one out. Average hospital stay is about 5 days. And as you can see at the bottom, between 2000 and 2010, the average cost of a hospital stay is more than doubled.
Oh my God. That's insane.
It is. I go, and we're another 10 years after that now.
Oh my God. Okay.
And this is most important for small businesses. What if your income stops? Okay, 42% of Americans say they live paycheck to paycheck. This is the thing that I think actually does concern most people, but we don't want to talk about it. Something big happens, what do I do about that? And you need to either think of disability insurance or some sort of supplemental insurance that will bridge the gap as you recover if you have that catastrophic event. I'm not talking about a 1 month thing or even maybe 2 months. Most people can cover that. I'm talking about 3 months and on that you need it. Illness and medical bills contributed more than 62% of all bankruptcies. And the sad part is that 78% of those people had health insurance. What they weren't able to cover were their mortgage or their health insurance because they weren't working. And then you need to think about how are you covered in these areas. If you wear glasses like I do, or you have contacts and certain issues, you need to make sure that you have a plan that can help you take care of that issue because you need to have your eyes monitored. Critical illnesses are something that a lot of people tend to overlook, but are very much aware of. How many people know someone who's had cancer? Or maybe they have Parkinson's, or they've had a stroke, Lou Gehrig's disease. Those can be very debilitating. But most people, if someone says, you've been diagnosed with cancer, will say, well, where can I go to get the best care? You know, Phoenix has the Mayo Clinic, but the Mayo Clinic is not on any ACA plan in the state.
None?
None.
I I did not know that.
Yeah. They are on group plans, but they are not on any ACA plans. So if someone were to, if that's a concern of yours, and you're like, that's something I would like to do, I would like to go get the best care, then you need to find out, how do I do that? Do I need some sort of supplement that would give me an option to go get that care? Okay. Health discount.
Okay, I have a question about that. Is that something that could be added at that time?
And not be added once you're diagnosed.
Right.
Okay. And I'm going to talk to you about that, because there's some options out that a lot of people aren't aware of,
Right.
and how to make it work in an economic way.
Okay.
Okay. Another thing is researchers have found that people with gum disease are 2 times more likely to suffer from coronary heart disease. So a good dental plan, and the biggest thing about the dental plan is going to the dentist. Most dental plans, the preventative care is covered. It's the more intricate things like a root canal or dentures that may not be covered in certain plans, which would require you paying a little bit more to get that covered. And things like dental implants, generally speaking, are not covered. There are a few plans out there that do cover them, and Delta Dental is one. And I don't mind telling you that, and this is for complete disclosure, I actually do not represent Delta Dental, but they do cover dental implants. And I have guided people to them if that's their need. And then telemedicine services. With all the things going on with COVID, a lot of companies have added it on the back end. That's going to end for some companies in June and July, and some are pushing it out to September. I actually recommend it as a good option, because it's going to prevent you from utilizing too much of your health care and wasting money when all you need is a prescription or an ointment that you can just go to the pharmacy. And at the bottom here, 95% of disabling injuries occurred off the job. So you might have workers' comp, but it only covers you while you're working. If they consider it to be a non-working event, they're not going to cover it. Okay. I pulled this up. You guys might be familiar with this, but most people don't take the time to look at their statement of benefits. This is what you get from your insurance company that tells you what they cover. So let's just look on the left here at Peg. She's having a baby. Okay. Her overall plan deductible is $4,000. Her specialist copay is $75. Coinsurance is 20%. This is really good. A lot of them are 50% or 40%. Okay. Her total cost in this example is $12,700. She has to cover her deductible of $4,000. She has co-payments for her doctor visits of $150, and she has $1,200 in coinsurance. There are some limits and exclusions that are $60, so she would end up paying $5,410, okay, to have a baby.
Wow,
Yeah.
Time has changed from when
Yes.
I was. Wow.
Yes, it has. Okay, and this is a Blue Cross plan in Prescott.
Wow.
Okay, but this is what a lot of people unfortunately aren't quite aware of. Here's an example of diabetes. This particular situation, the cost is $7,400, but because it's diabetes, all they would be paying for is their deductible. Okay, they would be paying their co-payments for going to see the specialist. They'd have no co-insurance, and then there's a $60 limits of or exclusions. So they'd only end up paying $1,700 for having a type 2 diabetes diagnosis, doing that care. Okay? They still, if they had to go to the hospital for anything else, would have to come up with the difference between this $4,000 and this actually $360.
Wow. Okay.
Okay. And so I always recommend people look at this so they kind of understand, where is the cost going to come if I have to make a payment. And every single plan has a statement of benefits that's going to show you an example like this. Here's another portion of that statement of benefits. People tend to overlook this emergency room. This is a 20% co-insurance. Okay. Now, there could be times if it's only $100 charge in the ER, you're only going to pay $20. But if it's $1,000 charge in the ER, you're paying $200. So people need to know what to expect.
Mm-hmm.
But here's the one that gets most people in the hospital. Okay, it's a 20% coinsurance, but they're saying pre-certification may be required. So did your doctor check with your insurance, make sure that you going into the hospital is going to be covered?
Does that include emergencies? Because I just had a friend who went in for an emergency appendectomy, and she spent a year almost to the day fighting because it wasn't pre-qualified, or it was weird.
Yeah, so that might depend on how that was coded. So if she had an inflamed appendix earlier, okay, they may say you should have had it scheduled.
Right.
Surgery scheduled.
Was not the case.
Yeah. And then emergency room coverage, it's a 20% co-insurance. Okay. So you're going to be covered for any emergency room issues, even if she has to go to surgery.
Right.
I'll show you where it might have been an issue that occurred where she got charged a little bit more. Let's finish this one up here, but additional $1,000 access fee for all bariatric surgery. That's not an appendectomy. That would be something that's going to have to deal with your stomach, basically.
Mm-hmm.
But that might be something that happens during the case. In your friend's case, the doctor might have been covered, the surgeon, but her anesthesiologist might not have been covered.
Correct.
Okay. And unfortunately, that is one of the worst groups across the board. You could have an anesthesiology group that's covered by your insurance, but one member isn't covered. Your doctor doesn't know necessarily, even if it's scheduled, who's going to come in that day to provide care. You can argue it. Having an advisor, someone like me, we can push back on those things, and we can go, hey, this was not presented to us in the right way, or what is a complete statement of benefits? What you're going to get from that is when you get your bill, you want a detailed bill, not their summary bill. And then you could argue things in that detailed bill back against your insurance provider and against the doctors that may be providing services. We had a woman that she was balance billed like that, and it took us some time. It was almost a year. But the way that the scenario played out, we were able to get the insurance company to take her out of the equation and say, you're paid for, because she paid the balance bill that doctor charged her, because the doctor put her into collections immediately. So she paid it so it wouldn't affect her credit. Mm-hmm. Argued it with the insurance company. The insurance company reimbursed her fully.
Wow.
And then went back after the doctor.
Okay.
So there are times when, as a team, that's what we work through.
Right.
Because we can push certain things back just because we have some of those connections. Remember, the insurance company is trying not to pay.
Of course.
So you have to ask the right way. Okay. Here's another section of that statement of benefits that I really ask people to take a look at. This is that time if you're going to be off work or you're going to be in rehab for 3 months or more. If you need home health, they're only going to pay for 42 visits, up to 4 hours. Okay? That is a reasonable amount of time, but what if you go over that? How are you going to cover that home health need that you need? I have a client, he had skilled nursing. His plan, unfortunately, did not do the 60 days that this offers. His plan did 20 days. He had an issue with some of the skilled nursing. He was in the hospital for 22 days. So he got a bill for those 2 extra days. We're working on that right now because something happened during his care that extended his skilled nursing time. Okay. But what I ask people to think about, this is where you're worried about money. What happens if I need nursing care beyond that time frame?
Mm-hmm.
For someone, like me in my 50s, I may not worry about that right now. But when I get to my 60s, that may be something I worry about more because my recovery time is going to be longer. Okay. The other thing that people need to worry about is these pre-certifications. So you need to make sure that the doctor codes it right and gets a pre-authorization before you move into care. And again, that's something that an advisor can help you with, because while you're trying to rehab, as an example, Don, let's say you were injured. If you were married, your spouse may not know everything, but if they have someone to talk to who can be that sounding board and help guide them through the process and reduce some of that frustration.
Okay.
Melanie, here we are to that life insurance. Why life insurance is important. 4 out of 10 people say that if one of the family members were to die, they'd be in immediate trouble covering their expenses. 7 in 10 say within 90 days they'd be in trouble if one of the household members lost their life. What you can do today with a lot of policies is there are term policies that allow for a living benefit. And it's cheaper than buying a critical illness rider or a critical illness supplement. So you could have, say, $500,000 worth of life insurance on a term policy that pays a living benefit and can give you up to 90% of that policy if you're diagnosed with cancer or if you have Alzheimer's. So now you have a way of being able to care for someone in your family or care for yourself without having to spend all that money up front, or without having to pay a high fee for a supplement like a critical illness rider, upon what makes sense. Or, as some people have done, you could use a whole life policy or variable life policy, have a cash value in it that you can borrow from, that gives you the rider to purchase critical illness or long-term care insurance through your life insurance as opposed to a separate policy. The challenge with just a long-term care policy is that if you're not diagnosed by a doctor for not being able to do 2 of the 6 daily functions of life and you pass away, those premiums are gone. You don't get that money. So, like I said, there are holes in every type of policy. It's walking through and talking through it to see what makes the most sense for you. If you're 60 years old and your family has a long lifespan, a long-term care policy may be the best thing for you because you can afford it. You have that available to you at the time you need it, and you move forward. But for some people who may not have planned enough ahead, that policy may be too expensive for them. A life insurance policy may work in a better way because it's going to be cheaper, but still provide them with the opportunity to use funds when necessary. Okay. Here's the part we talked about saving money for small businesses or independent contractors. The 21st Century Cures Act, signed by President Obama in December 2016, it contains a provision that makes it legal for eligible business owners to offer qualified small business health reimbursement accounts without incurring a penalty. Basically, your company is funding the health insurance, so it becomes a tax-free health benefit plan that your employees, you, even as a sole proprietor, can use for individual health insurance and medical expenses. Which small businesses can use HRAs? Employers with fewer than 50 full-time equivalent employees. Or employers who don't offer group health plans to their employees.
Okay.
Okay. What someone like me can do for you is traditional brokers will just, when you come to the new year, you either accept the renewal rates or you change insurance companies to try to find a lower rate, or you reduce your plan benefit. By being able to talk with an advisor like me, I'm going to help you redirect that and figure out how do we get the maximum benefit for the least amount of money to cover your needs, your specific needs. And then how do we leverage the individual market to get the best tax advantage? This QSE HRA and I'll be able to get you a copy of this, Don, if you'd like to see it, allows you to get a tax benefit where all your reimbursements are 100% deductible as a business expense. And because your employees are putting in money, all their reimbursements are considered non-taxable income. So this is a way from this example in the corner to be able to lower the cost monthly, but also get a tax benefit out of this, up to $4,950 per employee, depending upon your company scenario. And then this is for those self-employed S-corps. The IRS affords for an accident and health plan pursuant to Section 105 of the code. This type of plan goes through. The concepts surrounding both the rulings for this code allow for self-employed individuals to employ his or her spouse who is active in the business, and to offer that employed spouse a medical benefit package. Benefits offered cover the employee, employee's spouse, and the employee's dependents.
Okay, so being that my husband doesn't work for my business, he still benefit from this if I?
Yes.
Okay.
Yes.
All right.
Okay. So in reality, this allows a self-employed individual to deduct his or her family's health costs from federal, state, and FICA and Medicare taxes. Okay. What's allowed under this? Health insurance, dental insurance premiums are eligible for the employee and the family. This also includes qualified long-term care insurance. Out-of-pocket medical, dental, vision care expenses are eligible. Life, disability income, contact lenses, hearing aids, Medicare Part A, Medicare Supplement, vision, cancer insurance premiums are also eligible. Sole proprietors, partnerships, C Corps, S Corps, and limited liability companies. So there are some opportunities there to now take some of that cost that you've been paying for health insurance that you have to spend, lower it, so you might now buy a more robust plan that gives you more access and a lower deductible, and still deduct it from your taxes.
This is called a Section 105 plan?
Yes.
Is that what they call it?
Yes.
Okay.
And these are the types of things that someone like me can help you work through by having a nice long conversation about what do you need and what makes sense for you. Give you an example. I'm working with someone here in the Phoenix area. She's an OBGYN. She first contacted me just about insurance for her family. We looked at a couple of options. She did not want an Affordable Care Act or a marketplace option on the individual market. So I looked at some short-term options, but part of her family wouldn't qualify for it. So I was upfront about it, saying, I can put part of your family on this, but we need to find another option for those who don't qualify. As we continued to talk, he says, well, I have about 9 employees. I said, wow, we have another option. We can do a group plan for you. So her pre-existing conditions aren't going to matter. She can use a plan like this Section 105 or like the HRA, deduct that from her business expenses, cover her family, cover her employees to a certain degree, so she keeps and retains good employees, and get on a group plan.
That's cool.
Even though she thought she couldn't find a solution, we were able to find one.
That's great. Awesome.
And so those are some of the things that you don't know about health insurance that could hurt you.
All right.
So what questions do you have?
Oh, well, Don, do you have any questions?
Well, I looked in, I'm an independent contractor, no employees, just myself. I do have a spouse. I'm 63 years old. I looked into the healthcare.gov site,
Yes.
back in January, and I got some quotes from them, but it was very limited. I don't know if it's just me, my situation, but all they'd offer is HMO plans, and they were quite expensive. So I ended up with I have a short-term plan from United Healthcare,
Okay.
and it's considerably cheaper than the government plans. Am I doing the best I can, or is there something else I should be looking at? I haven't heard of the Section 105.
Yeah, that's something that we can look into. I'm not going to say that you're in a bad plan at all. I'm familiar with the United plan. Your options that you're one of the plans you most likely selected. It does have a $2 million limit. Okay,
Right.
lifetime limit. It doesn't cover things like mental health. It has some preventative options in it, depending upon which one you've chosen. It's a very good plan. But if you wanted full major medical, and you're 63, so for you, if there's no major issues with you, you've only have a couple more years, and you're onto Medicare.
Right.
And then you get a lot more options there. Being up in the Prescott area, Blue Cross Blue Shield is the only option you have. And then they have about 5 or 6 plans at the current moment.
Okay.
You might look at it again coming this next year. Do you have just a 1-year plan or the tri-term plan, United?
It's the 6 months plan.
Okay, 6-month plan. Okay, so you're going to get to open enrollment then. So United has what's called a tri-term plan that's available here in Arizona. You could have that plan for up to 3 years. And let's say you're on that plan and you're on it 6 months and you get diagnosed with diabetes. They're not going to kick you off the plan. They're going to cover you to the next year and the year after that. So that's a nice thing about that particular plan. And you could cancel it at any time. If things change, you're like, nope, I don't want this. This is another better option for me. You can cancel it at any time.
Okay. Yeah, I'd like to talk to you about that if I could.
Yeah, no, we can do that. And I can get you my contact information for that. That is not a problem. And see how that moves forward. The other thing for you is to start thinking about, and I know you're still 2 years off, but start looking at the Medicare options that are out there so you understand it, because it works a little bit differently than a short-term plan or any group plans you may have been on before, just to make sure you pick the option that best suits you.
Okay.
Okay. And we can go into more depth about that, but you have time to take a look at that. The other thing,
I thought I was a couple years out.
other thing you want to consider is the long-term care. How you're going to arrange to make that work for you guys. It might be a long-term care policy. It might be your life insurance. And if you have life insurance, it may be going and talking to whoever helped you with that and saying, is there a rider we can add to this that gives me options in the future, be able to take out money in case I'm diagnosed with critical illness or I need a long-term care benefit.
Interesting. Okay. Yeah, I do have life insurance, so I should talk to that person.
Yes. And I can talk to you about it as well, because some people do have access to it, some people don't. But I would prefer you, if you have it, talk to him or her, because you have that relationship. So I don't want to break that up. I just want to make sure that we're aware of what's available.
Okay, good.
And I can send you some information too in case you have questions about that.
Okay, yeah, I'd really appreciate that.
And then just to touch base with you, one of the reasons I got certified in dementia care, Melanie, is that Medicare was designed to last for basically 6 years. The lifespan in 1960 when it came about for most people was 71, 72 years of age.
Right.
Okay. People are living into their 80s now. My father's 85, my mother's 83.
My mother just passed in February and she had dementia it was early signs. It was 14 years ago.
Yeah.
Oh, wow.
So, yeah.
Yeah.
And she was in her 82. Yeah.
and understanding how to create a care plan for that.
Right.
Unfortunately, it's not like a 1-year care plan. This is like 5, 6, 10 years
Yeah.
that you need to try to figure out how that's going to work. So we need to talk about that ahead of time. But I'm not a fan of unitaskers. Having a plan that does one thing, it needs to do multiple things.
Mm-hmm.
So depending upon your scenario, you can pivot. You need to.
Okay.
Okay.
Well, I'm going to have to get together with you too, with my
Mhm.
husband, to have a look at what our options are too. I mean, a year and a half ago, we signed up for an insurance plan, and that was the first time in 10 years that I ended up getting health insurance. So I am definitely ready to look at some different options that are available to fit our scenario, because my husband is 72 or almost 72.
Mhm.
I'm 55. We've got different things going on here.
Yeah.
Different scenarios. Yeah. Okay, well, good. This is good and eye-opening and helpful.
Mhm.
Is there anything else while we have Edward on, or Edward, is there anything else that we should know?
Well, the thing is that there's a lot that goes on within the context of our healthcare and how we work through that. I think the biggest thing is just remember it's living, and having someone to help you through the process and to ask questions to is, to me, very important, because you don't want to be in the throes of somebody's hurt, somebody's injured, you're frustrated, they're frustrated. Nobody's ever going to answer your question properly at that point.
How often should people be looking at adjusting their insurance and stuff? How often should they be doing that?
Well, I mean, they should look at it seriously at least once a year. The sad part is most people spend less than 30 minutes picking out a healthcare plan.
Right.
And to me, that healthcare plan is not just your health insurance or what doctor or hospital. What does my life insurance look like now because I had babies, or now that my kids are in high school, or now that my kids are gone? What should that look like?
Mm-hmm.
And how is my family going to understand this? My parents blessed me and my brother well over 20, oh no, over 15 years ago. 15 years ago, Thanksgiving, they came and gave us a envelope that had keys to their house, keys to their safe, account numbers. This is my care plan. This is what's going on. And, it wasn't comfortable initially, but it's like, okay, everything's good. I know what's going to happen.
Yeah.
And people get weird when they get stressed.
Yeah. Yeah. And it's just one of those conversations that for some reason in our society, we just don't like talking about death, and we don't like talking and planning about these things.
Correct. And I recommend that people look at it at least each quarter. Here's what my plan is. Have we used it? How much of our deductible are we into? I had a couple that I was working with, and they wanted to change. We went, you've almost paid your deductible, so let's not change yet.
Right. Right.
In case something happens, you hit your deductible, the plan's going to pay for it. If we start new, you've got a whole brand new deductible you've got to hit this year, and then get into the next year.
So are you then available to your customers like that on a quarterly basis to kind of look over things?
Yes. One of the things that I do is if we sit down and we work together and we come up with a plan, and you agree to work with me and we get it all set up, is within 7 to 14 days, we have a follow-up. I want to make sure you got all your cards, you got everything that you need. And then 6 months later, at a minimum, we're going to meet again. Is everything still good? Is this making sense? Do we need to make any adjustments when we go into the next year? And then just before open enrollment, we'll meet again to kind of go, is this right? Everything's right. We'll keep it and keep moving. This wasn't right. We'll make an adjustment. I'm next. Or like things like have happened with COVID. So, I've contacted a lot of my clients and said, hey, you now have telemedicine. You didn't have that before. Here's the numbers to call. So you don't have to go in. hey, there's a new process, and this is how you're going to get your cards. This is how you're going to get whatever come in the mail is going to come. Keeping people up to date on things like that can be very helpful, because it's not something you need to think about all the time, but you need to be aware of what's going on.
Right.
Because another thing that you may not be aware of, either of you, is like I described, the commissions that we're paid are built into each of the plans. So the plans are the plans based on your location and your age, and that's it. It's how your advisor asks you questions to figure out your needs and their access to options to solve your problem.
Great.
And then another one for you, Melanie, is even if someone is on an ACA plan, especially a self-employed person, there's tax consequences. So if they are getting a subsidy, they've got everything positioned right where they're getting a subsidy, and their income goes up, practically, they're going to have to pay some of that back.
Right.
And I had a contractor that happened to him, and he's like, okay, April comes around, I thought I paid all my taxes. Like, nope, you owe us X amount because your income went up.
Wow.
People need to pay attention to those options
Okay.
more now.
All right.
Okay. Don, thank you for taking the time to spend with us. And I will
Yeah,
send
well,
out
thank
that
you, Edward. It
information.
was nice to meet you.
Nice to meet you too.
Okay. Thank you very much, Edward. And thanks, Don, for showing up with us.
Okay.
All right.
Thanks, Melanie, for organizing it.
You bet.
Bye-bye.
Bye-bye.
Bye.